Hello guys, welcome to another chapter on this course. So today we are going to see how to optimize your trading entry. The advantages of best entry: 1. Low risk. 2. Eliminate frustration. 3. Eliminate low probability trades. 4. Helps the trader to focus on high probability trades. 5. Increase the probability of success. 6. Increase the payoff ratio. So let's see another slide. Trade entry optimization. To have perfect trade entry, you have to combine the points below. Good technical analysis of the chart, like support and resistances in daily time frame, trend direction at H1 time frame, and also confirm if it's trending at M50 or it's ranging or correcting. In my case, I prefer the trending markets. Second point, apply the synchronization secret that we saw in previous chapters. The third point is search for an entry in a tick chart, because the tick chart gives good trade entries. It's not depending on the time, but it's depending on the market volatility. So this is an illustration of a perfect trade entry. You have to combine those 3 points for a good entry. So the first one is good technical analysis by steps. As we saw it in the strategy plan, you have to go step by step. Then family pairs synchronized, as we saw it in the table, the Excel sheet that I put it in previous chapter. And the third one is tick chart entry trigger. Okay, so your entry trigger must be in a tick chart for better results. You can do M5 time frames or 1 minute time frame, but for me, I'm not using this. I am using tick chart and I have good performance. Another thing that I want you guys to learn: never trade accelerations. Okay, we are going to see that in real chart. Don't anticipate or don't precipitate. You have to wait for a good pullback. Okay, so let's jump to the platform. I will explain you how to optimize your trade entry. A naked chart here with indicators, with just indicators. I will try to analyze it very quick. I will analyze the GBP family. See you when I finish. Here we are. I finished retracing my support and resistance in daily time frame. So let's jump to H1 to see a good example. Okay, so let's see this. For example, the trade of this week, this trade. Okay, so we have here the market trend in an uptrend. Okay, you have to confirm also in the GBP USD other family pairs, which is in an uptrend. The USD GPY in a downtrend. So in this example, we have to in these conditions, I will choose to trade GBP USD. it has more probabilities to progress larger than GBP GPY. We saw it in previous chapters. So let's confirm in M5 M50. Okay, so here let's see if we can retrace here an uptrend trend line here like this. Here the indicators are in an uptrend. I did a mistake here. Here the stochastic must be 34, the RSI 21, yes. So our indicators are telling us that it's trending up. Stochastic also. This is the same example here. So let's see M50 to confirm. I have to add moving average here. Simple moving average of 20 period. Let's put it blue. Okay, so in this case we can wait. We have here candlestick patterns that telling us that the market will reverse in this correction, and the price action, the candlestick patterns here telling us that that signal us the end of this correction. The market pulled up and did a short pullback here, and here we can see here a doji and bullish engulfing. We will not open a trade here at this time. When you see a configuration like this, you can see at M5 5-minute time frame or 300 ticks, but here 300 ticks it's like 5-minute time frame. So let's see in 115 ticks. Okay, in this case, for example, you have an acceleration here. You never ever trade accelerations, so you have to wait for the pullback. You have to wait the market to drop or do a pullback to the 15 area of RSI. This is the perfect trade entry with very low risk, and you can confirm it also with candlestick patterns. Here we have a deceleration. Look at this, the body of this, it's accelerating, but at this the next candlestick is decelerating. Look at the short body, the next body is also short, the next is also short body. That means a deceleration of this pullback. Okay, you will wait the green candle appear and the next candle close above the open and close of the previous candlestick, so we can open a trade here at this level. In money management, I will show you how to put your stop loss, but here we can focus only on trade entry optimization. Okay, so here you can open a trade and you will wait for the next pullback. When you have a volatile market, in this example we have, this is the currency pair that we want to trade, and this is the confirmation currency number 1, and this is confirmation currency number 2. The table says that if you want to trade GBP USD, the GBP GPY must be trending up, and the GBP GPY, the USD GPY must be trending down. Here we are in 115 ticks in all our graphs. So if the conditions to enter a trade are still here, you don't hesitate to reinforce your position. For example, you enter a trade here, okay, when the market do a pullback like this one, and do like this candlestick patterns. When you see like this candlestick patterns and the market did a pullback to the 15 zone, it's not a must to touch it here or be like in this example. It's a little bit below, but don't worry about that, because the market here is in a strong uptrend. If the GBP GPY and the USD GPY are still synchronized, I mean this trending down and this trending up, here don't hesitate to reinforce your position, okay? So like this, as in this example, you can reinforce your position here, because we have some candlestick patterns here, like a doji here and a bullish engulfing here. So you can enter another position with a large volume at the close of this candle. Like in this example, this is a major resistance. You have to stay focused, because the market always react in this areas, okay? You have to see your confirmation trades if the conditions are still in your favor. At this time, at 5:27, the market touched the resistance level. We can take a look at my confirmation pairs to see if the conditions are still in my favor. Here in our first currency pair confirmation, the market is still in an uptrend. In our second pair confirmation, at this time, here the market did a short pullback. At the time that we want to trade, the market here is still so in a downtrend. Look at the RSI, it's below 15, and the stochastic did here swing high. Here the market signaled us candlestick patterns, doji, and here have short engulfing patterns, and the candle close below this candlestick. At the same time, here we have 5:27 p.m. here, 5:27 p.m. here to 5:28 p.m. The conditions are still in my favor. If, for example, here the market dropped down a little bit and then go and breaks up the previous higher low, you can be alerted, and you can also close a part of your positions, or you can take all your profit also, okay? If the conditions are still in your favor, don't hesitate, reinforce your position. And we have here another example. The RSI did a pullback here to the 15 zone of RSI. The stochastic here signaled us also swing low. Here it raced to the 15 zone of stochastic also. Here we have a hammer and a bullish candlestick, so we can, at the close of this candle, we can open another trade, okay? So the market here still progressing up. So this is the best way to have a perfect trade on entries. I hope you guys understand very good this example of today, okay? If the conditions are still in your favor, don't hesitate to open a trade, to be kind of aggressive in your trades. Always take a look at your confirmation pairs if they didn't change the direction. I will advise you guys to never burn steps when analyzing market. You have to go step by step, as we saw it in the strategy plan, okay? Test it in demonstration account first to master the strategy that I am teaching you in this course. When you build confidence in this strategy, you can go live and profit of the opportunities that the market will give you. If you have any question, don't hesitate to contact me. I think that's it. Thank you for watching this video, and see you in more chapters.